Hey, it's Michael Saul, but everybody calls me Tiny, so why don't you? And this video is time to buck up plus updates and 3 stocks to watch. This is for the week of October 17th, 2016. So let's start with updates like we always do. Enanta Pharmaceuticals, ENTA. I said in last week's video that I wanted to watch for a breakout. Now, Thursday we had some shenanigans going on here, but we traded lower. Friday we traded down and through the 50-day moving average. So this is now off the list here. It's not set up anymore in my opinion, so let it set up in the next pattern before I look at it again. And the second stock was Cal Atlantic Group. And Cal Atlantic went sideways for a little bit, and then Thursday it finally closed down to a new multi-month low and traded a little bit lower on Friday. So the first support to watch is down here at 30.89. So that's Cal Atlantic Group and Enanta. And I have 3 stocks to watch for the coming week. This time I have 2 shorts and a long. Before we get to that, let me talk about the market here a little bit. The SPY finally broke down out of the triangle I was watching. Now Monday, Columbus Day, the banks were closed. We traded with a pause day up into the 50-day moving average and this top trend line. Then Tuesday we gapped down and we kept going. We sold off in earnest. I don't know who this earnest person is, but we sold off. Wednesday we paused. Thursday we took out these lows from September and then traded lower but got a nice reversal. So a lot of people were calling low for the lows there. Okay, the lows are in. Then on Friday we gapped up nice, but we traded into the just broken trend line and looks like we kissed it goodbye, sold off and closed below the open. Now you could see we still closed green but barely. This was not a bullish day any way you slice it. I do not believe the lows are in. I think we're going to take these lows out. Again, I'm not calling for a bear market. I'm not calling for a huge correction, but a retracement, a pullback, a correction if you want to call it that. I still believe we have lower prices to be seen. I think we're going to get at least to the 200-day moving average. And I just want to talk about something real quick. I'm reading a lot about elections and the market should stay sideways to the election, and perhaps it will. Okay, perhaps this was just a quick fake out, and from here we just stay in this range, whatever it is, and we go sideways. That is a possibility. But one thing that I want to point out is don't underestimate the amount that profit taking can come in to the picture here when it comes to the election. Okay, people taking profits ahead of the uncertainty and the craziness. Who's ahead? Who's behind? Who's being accused of this? Who's being accused of that? Who's calling who a criminal? Whatever it is. Okay, that's just the media stuff. But what happens is once the elections draw closer and closer, and if it's going to stay this close, the uncertainty can really, in my opinion, weigh heavily, and it may have people taking profits. And if they take profits, the market's going to trade lower. Now, I just want to point something out here. For the longer-term traders, if they bought the end of 2015 and we retrace down to the 200-day moving average here, down in the 206s, the high 206s, they would still be profitable. Yeah, they wouldn't be ripping, they wouldn't be up huge, but they would still be ahead. So taking profits a little bit here and the market going down, whatever it is, 6 and change now, okay, which is about 3% or whatever it is, it would still be profitable if you bought the end of 2015. If you bought the beginning of 2016, the 200-day moving average would still be profitable. If you bought into this double bottom, if you bought into this spike low in June, a trade down to the 200-day moving average would still be profitable for those people that bought there. Okay, so what's the point? Well, the point is that a lot of people talk about, oh, you know, they want to juice the market or they want to keep the market stable. Look, people are the same. They want to make money, just like me and you. We want to make money. And if they can make money while reducing risk, while taking positions off the table and trading down to and you know, therefore the market falls under its own weight. Because why does the market fall? Okay, 2 reasons. For people to start shorting stocks, but that's not the main reason. It's the buying support does not come in. Okay, instead of buying, people are either selling their positions or they're not continually buying, and it is an absolute possibility that this happens ahead of the election. Okay, that is the more of the, not really fundamental, but the non-technical reason. The technical reason I already went over. The kiss goodbye on the trend line, and if we start trading down and break through this zone, I think we're going to get to that 200-day moving average sooner rather than later. Here's the Qs. Okay, they look a little bit stronger, but not by much. The Russell's not looking that good at all. Testing 120 on the IWM, see if that breaks. The mid-caps also not looking great. And here's the Dow, which I really don't care about. Look at the stocks. Okay, so here's the semiconductors, and they were acting really well, nice and strong. They got a really sharp pullback here, and they came up and reversed at the 20 EMA, so we want to see what happens here. Banks, I had been watching for a little bit, and they broke out, but now they look like they may have a small divergence here at the new high. All right, hold on one second. Okay, so we have, I just put up the stochastic RSI here, and with what settings, I just used the Warden standard settings here, and if I grab my drawing tool, you can see, I mean, it's not a huge one. If you put regular stochastics on, you see it a little better. It's not the point. Point is, the momentum was not popping up higher on that push up here. All right, so it's not like huge divergence or anything like that, but it's also not momentum leading the way here. So we want to see what happens there. Biotechs, all right, they lost the 200-day moving average on Wednesday, paused Thursday, and then Friday continued lower. If we pull up a retracement here, let's see what we got here. We pull up the retracement here. All right. And we can see it's through the 62% retracement. So now it's 50-50 if I can get this thing to work here. Hang on one second. Okay, I actually got it to work. So on the BTK, the biotechs, this is key. 29.56 is going to be key. 29.56. On the biotechs. All right, so that's just going through a couple of the sectors here. Now, the title of this video is Time to Buck Up. One of the titles is Time to Buck Up. And what I mean by that is I want to talk about the dollar index, because the dollar index has a very interesting pattern setting up here on the monthly chart. And you could see if you're using the stochastic RSI here, even on the monthly chart, you could see it's just starting to turn. But look at this pattern here on the monthly dollar index. I mean, wow. This is a coil, and this can break out and get a nice run here. Let's grab the Fibonacci again. It's always fun to look at the Fibonacci, isn't it? So let's grab the Fibonacci, and you can see that right now we are basically right under that 62%, 61.8 actually, but I rounded up to 62, which is about 101.47. So trade to 101.50 would be a breakout here. The next level to watch. Let's see if I can do this without screwing it all up. Actually, I can use this one since I don't even like the 23. Okay, so the next level would be 110, and then up to the all-time highs up here at 121.02. So the dollar index, right, it's time to buck up here, since looks like it can break here, and if it does get going, it could be on its way to a pretty nice move higher here. All right, couple of ways to play it, of course. You can take the dollar index itself. You can short the euro, or you can, if you're trading spot forex, you can go short the euro against the dollar. All right, and there are other ways to play it too with the dollar pairs, but the euro versus the dollar gets the most bang for your buck as far as that is concerned. If you can't take the dollar in and of itself, there's also ETFs to trade, and this looks like it is getting ready to go. And yeah, there's about 3 points to the first target, but if it could really get hopping, this is a really, really nice move here that we could be in store for here. All right, and the bullish and bearish implications, maybe I'll go over that in another video. I'm not the sharpest when it comes to that. I'm mostly a technician, but you know, a rising dollar is said to be good for the stock market. So Let's see what happens there. And that's one of the reasons why I'm not looking for a full-blown bear market here in the S&P or the stock market overall. Okay, so quick review, and then we'll move on to the three stocks. Yes, we could absolutely go sideways from here. We could range out from here into the election at a minimum, maybe more. But I think we're going to trade lower, and I think the technical picture suggests that. And I also think the, I don't know, it's really not fundamental, but I guess we'll call it the non-technical, which is people wanting to take profits ahead of the uncertainty in the elections. Okay? Now, let's look at the three stocks that I talked about. The first one, these are old stocks, of course. The first one is the long, and it is oh, no, sorry, it's a short. I apologize. It's G3 Apparel Group. Okay? And you could see it is just consolidating here. The 20 EMA has caught up its resistance. If this breaks down, let's look at the monthly chart here. Okay, if this breaks down, you have nice support down in here in the 2270 area. Okay, so that's one to watch. WebMD, you can see WebMD had a nice pop up. Now it's pulled back to here, but I'm looking at WebMD actually from the short side. Again, you want to wait for confirmation, but that's a nice pattern. You have the nice move down in whatever it is, mid-September, and then you have the retracement here. Let's see what else we got right here. Maybe it needs to keep going up to the 50-day moving average, but you don't have to wait for that. If it triggers, it triggers. First target would be a retracement down to this low, down in the 48 area. And then the final stock is BVX, which is Bovi Medical Systems. Okay, and Bovi is in a small bull flag here. Okay, broke out of this base, has now, well, not really base, consolidation more than a base, and is now pulling back. So again, got to wait for confirmation. This could do what that Enanta did and just fall out of bed here. But if it starts to trade up out of this, look for a move up to new highs at a minimum. Let's go to a longer term chart. We'll start at a monthly, but you can see it's got some issues here, big M pattern here, so that's definitely going to be some issues. But even a move up to new highs or to $6, it could be a nice percentage gain for this. All right, so that's it. That is the weekly video to review. I'm looking for a strong move in the US dollar based on the monthly chart. I believe that the stock market has not seen the lows of this pullback. Don't think we're in a bear market. Don't think we're going into a massive correction, but a smaller correction, retracement, pullback, whatever you want to call it, appears to be in the cards. I do think we will take out last week's lows. And three stocks to watch: WebMD, G3 Apparel are shorts, and then Bovi Medical Systems is a potential long. Everything is potential, obviously. We're still waiting for triggers on everything, on G3, on WebMD, and on Bovi. Any questions? winningedgetrader@gmail.com. Have a wonderful week.